Welcome to our introduction to healthcare finance. Finance in healthcare organizations can be described as the method of getting money in and out of the organization. This involves managing revenue streams such as patient payments, insurance reimbursements, and government funding, as well as controlling expenses such as salaries, supplies, and equipment costs. It's crucial for healthcare organizations to ensure that their revenues exceed their expenses. This concept might seem straightforward, but it's the foundation upon which the financial health of any healthcare organization is built. Healthcare organizations that consistently generate more revenue than they spend can invest in improving patient care, upgrading facilities and technology, and attracting top talent. On the other hand, organizations that struggle to keep expenses below revenues may face financial distress, leading to cost cutting measures that can negatively impact patient care and employee morale. As future healthcare managers, it's essential to keep this basic principle in mind when making decisions that impact the organization's financial performance. Every decision you make, from staffing levels to equipment purchases, has financial implications that can affect the organization's bottom line. By understanding the importance of balancing revenues and expenses, you'll be better equipped to make informed decisions that contribute to the long-term financial stability of your organization. Management in healthcare organizations consists of four key components. First, planning involves setting goals and determining the actions needed to achieve those goals. This includes developing strategic plans, budgets, and operational objectives. Effective planning requires a deep understanding of the organization's mission, vision, and values, as well as the external factors that can impact its success, such as changes in healthcare regulations, market conditions, and patient demographics. Second, organizing is the process of allocating resources and assigning tasks to achieve the planned goals. This involves designing organizational structures, defining roles and responsibilities, and establishing lines of authority and communication. Effective organizing ensures that everyone in the organization understands their role and has the resources they need to perform their tasks effectively. Third, controlling and directing involve monitoring progress, making necessary adjustments, and providing guidance to keep the organization on track. This includes setting performance standards, measuring actual performance, and taking corrective action when necessary. Effective controlling and directing require regular communication, feedback, and coaching to help employees stay focused on the organization's goals. Finally, evaluating outcomes is the process of assessing the results achieved and determining whether the goals were met. This involves collecting and analyzing data, comparing actual performance to planned performance, and identifying areas for improvement. Effective evaluation requires a systematic approach to measuring and reporting on key performance indicators, as well as a willingness to learn from successes and failures. As managers, you'll be responsible for executing these components effectively to ensure the success of your organization. This requires a combination of technical skills, such as financial analysis and project management, as well as interpersonal skills, such as leadership, communication, and teamwork. By mastering these components of management, you'll be better equipped to drive the performance of your organization and achieve its goals. Healthcare organizations use two main types of accounting: financial accounting and managerial accounting. Financial accounting focuses on external reporting and adheres to generally accepted accounting principles, or GAAP. GAAP is a set of rules and standards that ensure financial statements are consistent, comparable, and transparent. Financial statements prepared using GAAP include the balance sheet, income statement, and cash flow statement. The balance sheet shows an organization's assets, liabilities, and equity at a specific point in time. The income statement shows the organization's revenues, expenses, and net income over a period of time, usually a fiscal year. The cash flow statement shows the inflows and outflows of cash during the same period. Financial accounting provides information to outside parties, such as investors, creditors, regulators, and the public. These external stakeholders use financial statements to assess the organization's financial health, make investment decisions, and ensure compliance with laws and regulations. On the other hand, managerial accounting is used for internal reporting and decision making. It's not bound by GAAP and can be tailored to the specific needs of the organization. Managerial accounting provides information to internal stakeholders, such as managers and executives, to help them make informed decisions about resource allocation, cost control, and performance evaluation. Examples of managerial accounting reports include cost benefit analyses, budgets, variance analyses, and performance dashboards. These reports help managers identify areas for improvement, set targets, and monitor progress towards goals. As healthcare managers, you'll primarily use managerial accounting to make informed decisions that drive the organization's financial performance. However, it's important to have a basic understanding of financial accounting principles and to be able to interpret financial statements. Healthcare organizations can be classified into three main categories based on their ownership and tax status. For-profit organizations are owned by investors and pay taxes on their income. These organizations are typically structured as corporations or partnerships and are driven by the goal of generating profits for their owners. Examples of for-profit healthcare organizations include privately owned hospitals, medical practices, and health insurance companies. Nonprofit organizations are tax exempt and are typically owned by the community they serve or by religious organizations. These organizations are required to reinvest any surplus funds back into the organization's mission and are prohibited from distributing profits to owners or shareholders. Examples of nonprofit healthcare organizations include community hospitals, faith-based health systems, and charitable clinics. Public healthcare organizations are government-owned and tax-exempt. These organizations are funded by taxpayers and are typically operated by federal, state, or local government agencies. Examples of public healthcare organizations include Veterans Affairs hospitals, county health departments, and state-run mental health facilities. Each type of organization has its unique challenges and financial considerations. For-profit organizations must balance the need to generate profits with the need to provide high-quality patient care. Nonprofit organizations must ensure that they are using their resources effectively to further their charitable mission. Public organizations must operate within the constraints of government budgets and regulations. As healthcare managers, you'll need to understand the specific financial and operational challenges of your organization type. This understanding will help you make informed decisions that align with your organization's mission and financial goals. Additionally, you'll need to be aware of the legal and regulatory requirements that apply to your organization type, such as tax reporting, charitable giving, and public disclosure requirements. Organization charts are visual representations of a healthcare organization's structure, lines of authority, and degree of decentralization. They serve as essential tools for understanding the roles and responsibilities within the organization and how they relate to one another. The purpose of an organization chart is to provide a clear picture of the formal relationships between positions and departments. It illustrates the chain of command, showing who reports to whom and who has the authority to make decisions. This clarity is essential for effective communication, coordination, and accountability within the organization. Organization charts also show the degree of decentralization, which is the extent to which decision-making authority is distributed throughout the organization. In a centralized organization, decision-making power is concentrated at the top, with senior executives making most of the key decisions. In a decentralized organization, decision-making power is distributed to lower levels of the organization, with managers and staff having more autonomy to make decisions within their areas of responsibility. The degree of decentralization can have significant implications for an organization's agility, innovation, and employee engagement. Decentralized organizations tend to be more responsive to changes in the environment and more open to new ideas and approaches. They also tend to have higher levels of employee engagement and job satisfaction, as employees feel more empowered to make decisions and contribute to the organization's success. As healthcare managers, you'll use organization charts to navigate the complexities of your organization and make informed decisions. You'll need to understand your own position within the organization chart and how it relates to other positions and departments. You'll also need to be aware of the decision-making processes and protocols within your organization, including who has the authority to approve budgets, hire staff, and make strategic decisions. When creating or updating an organization chart, it's important to ensure that it accurately reflects the current structure and relationships within the organization. This may require gathering input from different departments and stakeholders to ensure that the chart is comprehensive and up to date. It's also important to consider the potential impact of changes to the organization chart, such as reorganizations or mergers, on employees and operations. As healthcare managers, you play a crucial role in your organization's financial performance. One of your primary responsibilities is controlling costs and resources within your department or unit. This involves making decisions about staffing, supplies, and other expenses to ensure that your area operates efficiently and effectively. Staffing costs are often the largest expense for healthcare organizations, so managing these costs is a key priority for managers. This may involve determining the appropriate mix of full-time, part-time, and contract staff, setting productivity standards, and monitoring overtime and absenteeism. Managers also need to ensure that staff are properly trained and equipped to perform their roles effectively. Supply costs are another significant expense for healthcare organizations, particularly for areas like surgery and pharmacy. Managers need to work closely with procurement and inventory management teams to ensure that supplies are ordered and used efficiently with minimal waste and expiration. This may involve implementing just-in-time inventory systems, negotiating bulk purchasing agreements, and monitoring usage patterns to identify opportunities for cost savings. In addition to staffing and supplies, managers also need to control other expenses such as equipment maintenance, utilities, and contracted services. This may involve negotiating service contracts, implementing energy efficiency measures, and monitoring usage to identify opportunities for cost savings. Effective cost control requires a proactive approach to financial management. Managers need to regularly review financial reports and performance metrics to identify trends and variances from budget. They also need to engage in continuous process improvement to identify ways to streamline operations and reduce waste. However, cost control is just one aspect of a manager's role in financial performance. Managers also need to focus on revenue generation and growth. This may involve identifying new service lines or markets, improving patient satisfaction and loyalty, and developing partnerships with other providers or payers. Your ability to manage costs and drive revenue growth directly contributes to the overall financial health of the organization. By making informed decisions that optimize resources and improve performance, you can help your organization achieve its financial goals and sustain its mission over the long term. As healthcare managers, it's important to remember that every decision you make has financial implications. Whether you're approving a new hire, ordering supplies, or implementing a new program, you need to consider the costs and benefits of your actions. This requires a deep understanding of your organization's financial metrics and performance drivers, as well as a willingness to make tough decisions when necessary. It's important to understand the broader context of healthcare spending in the United States. Over the past several decades, healthcare spending has grown significantly as a percentage of the country's gross domestic product, or GDP. In 1960, healthcare spending accounted for just 5% of GDP. By 2019, it had grown to over 17% of GDP, amounting to $3.8 trillion. This growth in healthcare spending has been driven by a number of factors, including an aging population, advances in medical technology, and the increasing prevalence of chronic diseases. However, it has also led to concerns about the sustainability of the healthcare system and the affordability of care for individuals and families. In addition to growing as a percentage of GDP, healthcare spending has also increased significantly on a per capita basis. In 1960, per capita healthcare spending was just $146. By 2019, it had grown to over $11,000 per person. This increase has outpaced inflation and wage growth, putting a strain on household budgets and contributing to rising insurance premiums and out-of-pocket costs. Despite this increased spending, improvements in key health outcomes have slowed in recent years. Life expectancy in the United States has plateaued since 2010 after decades of steady increases. In fact, life expectancy has actually declined in some years, due in part to rising rates of suicide and drug overdose deaths. Similarly, while infant mortality rates have declined significantly over the past several decades, the pace of improvement has slowed in recent years. The United States now has one of the highest infant mortality rates among developed countries, despite spending more on healthcare than any other nation. These trends have led to calls for greater value and efficiency in the healthcare system. As healthcare managers, it's crucial to be aware of these issues and to work towards finding ways to improve the quality and affordability of care. This may involve implementing evidence-based practices, reducing waste and inefficiency, and focusing on preventive care and disease management. It may also involve working with payers and policymakers to develop new payment models that incentivize value over volume, such as bundled payments or accountable care organizations. Ultimately, the goal of healthcare management should be to maximize the value of care for patients and society as a whole. By understanding the broader context of healthcare spending and working towards greater efficiency and effectiveness, you can help ensure that your organization is part of the solution to the challenges facing the U.S. healthcare system. The healthcare sector has been a significant driver of employment growth in the United States. Historically, healthcare employment has grown steadily, even during times of economic downturn. Between 2009 and 2019, healthcare employment grew by 23%, adding over 2.8 million jobs. This growth was driven by a number of factors, including an aging population, advances in medical technology, and the expansion of insurance coverage under the Affordable Care Act. Looking ahead, projections suggest that healthcare will continue to be a major source of job growth. According to the Bureau of Labor Statistics, healthcare employment is expected to grow 15% from 2019 to 2029, adding over 2.4 million new jobs. This growth is projected to be faster than any other occupational group. By 2029, healthcare is expected to account for over 13% of total employment in the United States, up from 12% in 2019. This growth will be driven by a number of factors, including the continued aging of the population and the increasing demand for healthcare services. Within the healthcare sector, certain occupations are projected to experience particularly strong growth. For example, employment of home health and personal care aides is projected to grow 34% from 2019 to 2029, adding over 1.1 million new jobs. This growth will be driven by the increasing preference for home and community-based care, as well as the growing number of elderly individuals who require assistance with daily activities. Other occupations projected to experience strong growth include nurse practitioners, physician assistants, and medical and health services managers. These occupations typically require higher levels of education and training and offer higher salaries than many other healthcare occupations. As future healthcare managers, you're entering a field with strong job prospects and opportunities for growth. However, it's important to be prepared for the challenges that come with managing a growing workforce in an increasingly complex healthcare environment. This may involve developing strategies for recruitment and retention, as well as implementing training and development programs to ensure that staff have the skills and knowledge needed to provide high-quality care. It may also involve working with educational institutions and professional organizations to develop pipelines for new talent and to promote the attractiveness of careers in healthcare management. Additionally, as the healthcare sector continues to evolve and change, managers will need to be adaptable and proactive in their approach to workforce planning and development. This may involve anticipating changes in the healthcare landscape, such as the increasing use of telemedicine and artificial intelligence, and developing strategies to ensure that the workforce is prepared to meet these challenges. As we conclude this introduction to healthcare finance, let's recap some of the key concepts we've covered. We started by discussing the definition of finance in healthcare organizations and the importance of ensuring that revenues exceed expenses. We then explored the four components of management: planning, organizing, controlling, and directing and evaluating, and how they relate to financial management. We also discussed the two main types of accounting used in healthcare organizations: financial accounting and managerial accounting, and how they serve different purposes and audiences. Financial accounting focuses on external reporting and follows generally accepted accounting principles, while managerial accounting is used for internal decision making and is not bound by GAAP. Next, we examined the three main types of healthcare organizations: for profit, nonprofit, and public, and how their ownership and tax status can impact their financial goals and challenges. We also looked at the role of organization charts in illustrating the structure, lines of authority, and degree of decentralization within healthcare organizations. We then delved into the crucial role that managers play in controlling costs, managing resources, and contributing to the overall financial health of their organizations. This includes making informed decisions about staffing, supplies, and other expenses, as well as driving revenue growth and identifying opportunities for improvement. Finally, we discussed some of the broader trends and challenges facing the U.S. healthcare system, including the growth in healthcare spending as a percentage of GDP and per capita, as well as the slowing improvements in life expectancy and infant mortality despite increased spending. We also looked at the historical and projected growth in healthcare employment and the opportunities and challenges this presents for healthcare managers. Throughout this lecture series, we've emphasized the importance of understanding healthcare finance for managers. As healthcare leaders, you'll be responsible for making decisions that have significant financial implications for your organizations and the patients you serve. Whether you're developing budgets, evaluating investments, or implementing cost-saving measures, a strong foundation in financial management is essential for success. But beyond just the technical skills of financial analysis and decision making, understanding healthcare finance is also crucial for effective leadership and communication. As a manager, you'll need to be able to clearly articulate the financial goals and challenges of your organization to a wide range of stakeholders, including staff, patients, board members, and policymakers. You'll also need to be able to translate financial data into meaningful insights and actionable plans for improvement. Ultimately, the goal of healthcare management is to ensure that organizations have the resources and capabilities needed to provide high-quality, affordable care to the communities they serve. By understanding the complex financial landscape of the healthcare industry and making informed, data-driven decisions, you can help your organization achieve this goal and make a positive impact on the lives of patients and families.